podcast is brought to you by DABA, your most comprehensive platform for investing in African stocks, bonds, and managed funds. You can download the DABA app on your favorite Google and Apple app stores. We start this week with genuinely good news. The West African Regional Stock Exchange, the BRVM, has just marked its 29th anniversary. This is a powerful symbol. For nearly 3 decades, the BRVM has played a central role in financing governments and companies across the WAMU region, connecting local savings to long-term development needs. The week of December 15th to December 19th fits squarely into the story of a market that is maturing and becoming more disciplined. Let us start with the big picture. Over the past week, the equity market entered a phase of consolidation. The main BRVM indices moved lower. The BRVM Composite Index closed around 343 points after falling by just over 1% on the week. The BRVM 30 followed a similar path, while the BRVM Prestige Index recorded the steepest decline, close to 1.2%. Why does this matter for investors? Because a broad-based decline does not automatically signal bad news. In many cases, it reflects a healthier and more selective market. After several weeks of strong gains in specific stocks, investors pause to lock in profits. This is what we call a consolidation phase. It allows the market to reset and build more sustainable momentum. Another important signal this week came from trading activity. The number of shares exchanged dropped sharply, with volumes down by more than 40%. But the story does not stop there. At the same time, the total value of transactions more than doubled, reaching close to 7.9 billion francs CFA. What does this tell us? Investors focus their trades on large-cap companies. Fewer transactions, but larger ticket sizes. This is typical of periods when institutional investors and long-term players take the lead. Now let us turn to the stocks that stood out during the week. On the upside, one stock clearly dominated. Air Liquide Côte d'Ivoire delivered the strongest weekly performance, rising by more than 42% to close near 1,340 francs CFA. Why such a sharp move? The rally followed a shareholders' meeting held midweek. Investors were reassured on 3 key fronts. First, long-term contracts that secure future revenue visibility. Second, a strengthening of equity capital, a core indicator of financial resilience. Third, improved strategic clarity. The result was strong buying pressure. This is an important reminder for investors. Governance and balance sheet signals can move markets just as much as earnings figures. Another notable gainer was Sucre Ivoire Côte d'Ivoire. The stock rose by more than 11% to close around 115 francs CFA. This performance fits into a broader trend. The agro-industrial sector remains one of the strongest drivers of the market this year. Why does this sector matter? Because it benefits from resilient regional demand, favorable agricultural pricing, and improving industrial organization. For investors, this confirms the value of looking beyond traditional sectors such as banking. Solibra Côte d'Ivoire also recorded a solid week. The stock advanced by nearly 8% to close around 28,800 francs CFA. The sector backdrop remains supportive. Food and beverage companies benefit from steady consumption patterns, even in more cautious economic environments. Now, let us look at the downside. The week saw more declining stocks than advancing ones. 24 stocks fell, while 20 recorded gains. This points to a broadly cautious market tone. Unilever Côte d'Ivoire posted the sharpest weekly decline. The stock fell by nearly 14% to close around 37,000 francs CFA. This move may seem surprising at first. In reality, it reflects profit-taking. The stock had posted strong year-to-date gains following its acquisition, without any major recent announcements. This is a classic market lesson. Strong past performance often attracts short-term selling. Another notable pullback came from NEICD Côte d'Ivoire, which declined by nearly 5% to around 900 francs CFA. This move also reflects a normal adjustment after several weeks of steady gains. NSIA Banque Côte d'Ivoire rounded out the list of weekly laggards, falling by about 4% to roughly 11,500 francs CFA. The key takeaway here is simple. The declines seen this week do not signal a crisis. They reflect a market that is pausing, reassessing, and repositioning ahead of year-end. Let us now shift to the bond market. The bond segment remained relatively stable. Overall capitalization edged slightly lower, by about 0.2%. Trading activity reached approximately 4.99 billion francs CFA, down modestly from the prior week. Once again, concentration tells the story. Most trading activity focused on a Senegalese sovereign bond with an intermediate maturity, effectively a 10-year instrument offering an attractive coupon. This single line accounted for more than 60% of traded volumes. Why such strong interest? Because when equity markets turn cautious, investors seek predictable income streams. Well-rated sovereign bonds play a stabilizing role within portfolios. Other bond issues also traded actively, including 8-year and 10-year maturities, offering yields that remain attractive compared with traditional savings products. For individual investors, this is a key point. Bonds can generate steady income while reducing overall portfolio volatility. Let us return briefly to the institutional milestone of the week. On December 18th, the BRVM celebrated 29 years of existence. Founded in 1996, it remains one of the very few fully regional stock exchanges in the world. It serves 8 WAMU member states through a single integrated market. For investors, longevity equals credibility. The BRVM has navigated economic cycles, financial shocks, and periods of expansion while continuing to fulfill its role. What does this mean in practice? The BRVM is no longer a fragile emerging market. It is steadily evolving into a regional reference market, with transparency and governance standards increasingly aligned with international norms. This provides a solid foundation for long-term investment strategies. Looking ahead, the coming week presents opportunities across both equities and bonds. Recent adjustments have made certain valuations more attractive, but discipline remains essential. Not every opportunity is created equal. Stock selection, entry timing, and alignment with individual risk profiles will determine outcomes. This is where structured guidance becomes critical. DABA Pro subscribers gain access to in-depth analysis and curated recommendations designed to navigate these market phases with clarity. If your goal is to turn market movements into informed decisions, structure matters. To receive weekly recommendations, access exclusive analysis, and reduce your investment costs, subscribe to DABA Pro. With DABA Pro, you do not just follow the markets, you understand them and stay ahead. That's all for today's episode. Thanks for listening to the DABA Markets Talk podcast. We'll be back next week with another update. If you enjoyed this episode, please leave a rating, follow us, and share with friends. Remember, this information is for educational purposes. Always do your own research or consult with a financial advisor before making investment decisions. And download the DABA app on your App Store to start investing in African stocks, bonds, and manage portfolios through your phone and find other helpful content. Until next time, keep learning and keep growing your financial knowledge.